totally right. That's totally wrong approach. If market is going up and if structure is bullish, then don't try to enter in any trade. Don't try to enter in the selling trade. Always try to look for some strong levels, and when those levels will come, then you can take entry. And how you will take entry? You will take entry based on strict rules, based on some specific levels, and if there are candlestick pattern available at that level. For example, if one level came, and if there is bearish engulfing form and then evening star form, then you can take entry with that, but with strict stop loss like above it. If it fails, you will simply exit the market, because this is the financial market. There is trillions of dollar involved in it, and no one will let you make profit. That's why, to being a successful trader, you must have to work with proper risk to reward ratios, and then with strict stop losses. You must have to train your mind. You must have to do strong exercise. You must have to do strong meditation for strengthen of your minds, that you will definitely put stop loss. You will never move that stop loss. Most of the traders do that. If they put their stop loss, then they will continuously change that stop loss above and below, considering that market will move in their own direction. But those things never happens, and market suddenly hit their stop loss or suddenly moves opposite of it, and they will lose. So working with some strong methods, working with SL is very necessary. Let's talk about how much amount you should use with one specific entry and what should be the criteria. So if you are working with $100, then your one trade should be with $1 risk. What does it mean? That always risk 1% of your account if you are working with your own capital. But if you are working with the challenges or funding accounts, then you should go with 0.3 or 0.5%, and that 1% or 0.1 0.5% should be risk at some strong level, at some strong point. And if you come to your screen and if you see something, then suddenly moving into or suddenly going into trade is not recommended. You guys have to be wait patiently, and when that level will came, and if there is candlestick pattern formation like bullish engulfing, bearish engulfing, morning star, evening star at that level, or at the Fibonacci level, or if there is some bullish or bearish divergence in the RSI, then you can take entry. Without those things, don't ever try to enter in the market. So what is risk to reward ratio, and how I usually manage that? Risk to reward ratio is simply that if you are going to lose $1, then you should make in that trade $3. So if you are putting stop loss of $1 and then put your TP with the $3, and by following this strict system, and if you have a strong strategy, you guys will never be fail. Always put stop loss and don't move your stop loss. It does not matter if your stop loss hit or not. Okay, when you will move into monthly basis and when you will see results, then those results will definitely shock you, because you guys will be in a profitable stage. Why? Because if your win rate is only 40% and if your risk to reward is 1:3, then you guys will be in a huge profit after 1 month. So if you are losing in 1 day, 2 day, 3 day, that does not matter. If you lose, if you win 4th day or 5th day or 6th day, those are absolutely fine. This is a part of the trading. Losing and winning is just a matter of time, and you guys will never regret when you will see after 2 months or 3 months that your whole account will be definitely grown so much. But following a strict system is necessary. What most of the people do, if they have entered in the buy position, then they will not put any stop loss, and they will continuously buy more when market will going down, and at the end they will lose all their account and their whole account will be washed. That is totally wrong approach. Okay, what I do, I usually do swing trading or intraday trading. So what is difference in intraday trading and swing trading, or in the scalping? So if you see my perspective, then I don't recommend scalping. Why? Because scalping usually happens with the 1 minute or 5 minute, and there is a lot of noise available and present. And if you try to do entry, or if you try to make any setup in this noisy market, then of course your stop loss is going to hit properly. But when you will see in the daily time frame, or 4 hour time frame, or 1 hour time frame, and if there is some strong points like fair value gap is available, support and resistance is available, or if you are working with the Elliott wave, then if there is Elliott wave available, then you can easily take trade, and that will be considered as a intraday trade or swing trade. So swing trade or intraday trade with the higher time frames have most of the chances of win, because there is less noise, there is clarity in the market. But most of the people do scalping, and if you do scalping, first of all I will not recommend scalping, but if you do, then don't take trade 3 to 4 trades in one specific day. Don't trade more than that. That will considered as a hour trading. If you take trades with the scalping, then if you usually take trade with 1%, then decrease it to 0.3% or 0.4% in this scalping, because there are very high chances of getting stop out in this scalping type thing, and that's why I don't recommend it. If you see, then my all trades are based on swing trading or day trading. I don't take trades on daily basis. Usually I occasionally take trade, and if I took a scalping trade, then I will took only with 0.2% or 0.3%. I don't take blindly with 1 lot or 2 lot in this scalping. And of course, why I know that that is going to be hit stop loss. But when I will do a proper research, when I will do proper analysis on daily time frame, and then I will do analysis on 4 hour and 1 hour, then a good setup will come, and then I will go with 1% or 2% of my account with that big setup. And if that stop loss hit, it's absolutely fine, it's just part of the game. I will not regret it. Why? Because I have followed some strong path, I have followed my strategy, and I know that at the end I'm going to be successful. Why? Because I have back tested my strategy. So what is back testing of strategy? So when you will learn one specific method, one specific strategy, most of the people don't have strategy. So first of all, learning some strategy is necessary, and then you will back test that strategy. What is back testing, and what is forward testing? Back testing is simply when you will learn that when these things will happen, you will enter in the market. For example, if you figure out that this indicator is working, or this method is working, like if RSI divergence is working, or if Elliott wave is working, or if Fibonacci retracements are working, and then when those levels came, usually market forms these behaviors, like these type of behaviors are showing in the volume, and these type of behaviors are showing in the RSI, and these type of candlestick patterns form usually on those levels. When you will understand this, then you will go into back or in the past of the market, and then you will put your notes, and you will get your notes, and you will write each trade, and you will take 5 to 10 trades or 20 trades. And if your strategy or if your system has 40% trades or 50% trades with the 1:3 risk to reward ratio, I already explained what is risk to reward ratio. If you gonna move previous stream a little bit, go back, then you guys can see. So when that risk to reward ratio is mentioned, and you have figured out your strategy, if your strategy has more than 50% win rate, and then what you will do, you will do forward testing. So what is forward testing? Forward testing is simply a demo trading. When you will do demo trading 1 month, and you have applied all those method or all those strategy which you have back tested. Back testing trades should be up to 50 or 100 trades. When you have back tested 100 trades in the paper with some method, and if you are successful, and if your win rate is 50%, if your risk to reward ratio was 1:3 or 1:5, and you are overall profitable in the back test, then you will do demo testing in the live environment. And after 1 month of demo trading, you must have 50 to 100 trades in the demo. And then when you will analyze your performance, then win rate will come, your profit factor will come, and how much trades you win, what type of profits you made. And if you are successful in demo with that strategy, then you can move into live trading. And in the live trading, you will follow strict plan. Like if you have make 5 to 10% in one specific month, you are a successful trader. Don't expect too much. Don't expect that you will put $100 and you will make $500. There is nothing going to happen. All successful traders, just make 5 to 10% in one specific month, and they are successful. If you see big institutions or hedge funds and Jimmy Simpsons and all those people, they just make 30% or 25% in one whole year, and they are successful. So if you want to be a successful trader, and if you are making 5% in one specific month, you guys will never fail. You guys will definitely earn for the longer term. And if you think that with the $200 or $500 you are going to make thousands dollars, then that is totally wrong approach. That is thinking of gamblers, and gamblers will always fail. If your strategy fail at one specific time, then you can move into another time, and then again you can move into another day, and until if you have tested very well, and if your strategy is working, then definitely you will make long-term profits. And keep twisting your strategy, keep filtering false signals with adding some different approaches or different things or different indicators and all those stuffs. Now let's talk about indicators and expert advisors, EAs. So first of all, keep in mind that there is not any exact indicator available on which you will work and that will give you profit. This is the truth and harsh reality of this whole industry, that there is not any holy grail expert advisor available. There is not any holy grail indicator available. All those indicators which I use or which are available, like I'm using this indicator here, and this indicator is also lagging indicator. All those indicators are lagging indicator which are available in the market, and they will only appear when their market has already moved, and then after it will appear. And it seems that those indicators are going to work out. None are there is nothing like indicators which works 100% and which gives you profits. Same type of scenarios are available with the expert advisors. Most of the people think that they will just simply put an expert advisor in it, and they will just go with it, and they will earn on monthly basis. There is nothing like that. Why? Because if this type of things it really works, then why people should do a job? There should be not any job, or people should just simply put one specific expert advisor, and they will simply earn on monthly basis, and they should leave their jobs. So this is the harsh reality, that all those expert advisors have deficiencies in them, and there is not any exact expert advisor available. There are, I have seen a lot of YouTubers who are promoting some expert advisors, and I also seen many YouTube channels who are only based on those expert advisors and EAs, and they say that just simply put this EA you will make money, just put this EA you will make money. But I have tested even thousands of expert advisors, and I have back tested all of those. Maybe some EAs will perform very good in the history, and when you will apply them in the real market, they will definitely give you losses. Why? Because if some EA is working, then why the developer will give you that EA? Why they should not make money themselves? Why they do not become millionaire, billionaire when they are selling it for $100 or for thousands of dollars? So there is the one website which is available, MQL5, and if you see, then they, even those expert advisors, developers make hundreds of dollars or even millions of dollars with by just selling these expert advisors. And all those people who do not have knowledge of these advanced things, they just simply buy it, but they are not familiar with the harsh reality. If one EA is workable, or if one EA is working 5 days or 10 days or even months, keep in mind that at one specific point that EA will give you losses. That EA is going to wash your account permanently. Okay, this is the truth, or this is the reality. How backtest results are very good, and how they show very good results in the backtest, because I have analyzed thousands of expert advisors, and I become millionaire or billionaire in the backtest. But when I will apply it live, they are not going to work, because they put just simply history reading function in some expert advisors, and they will remove bad trades, they will just tweak it and all those stuffs. And when you will apply it in the live, maybe you will get profits for 1 day or 2 day, but eventually you will lose your account. There is another approach which is usually considered as a martingale strategy, a martingale approach. In the martingale, usually bot keep adding more in one specific side. If you have bought, then it will perform as a grid, and when market will again go down, it will again buy. When market will again go down, it will again buy, and it will continuously buying. But at one specific point, if market does not behave very much, then all those things will be form a great loss and your account will be washed. So I have seen many martingale expert advisors who worked for even 2 years or 3 years, but definitely they at one point they will collapse. And I already seen many expert advisors, such expert advisors, and they collapse perfectly, and all those people who were investing in them, they just simply lose money. So that's the main reason that you should not go with these, because these are not trustworthy. Trading, if we see in the past and if we see in the future, trading is based on human emotions, and all the traders are humans, are involved in it. So if you are putting strict stop loss, then you are a successful trader. I have seen thousands of expert advisors, but none of them gives you this risk to reward ratio like 1:2 or 1:3. No one is giving this risk to reward ratio. If some advisor give this risk to reward ratio 1:3, and if its win rate is 50%, I am challenging you, there is not any existed EA which gives this. If anyone is giving, then that expert advisor is successful, and keep in mind that developer of that expert advisor will not give you that EA. And of course I know that there is nothing like these things, and these things does not exist. Okay, only a human can do this type of risk to reward ratio or this type of management. And because there are thousands of factors, most of the people just manipulate you or just use a chat gpt as a good tool, and they will say that my indicator is using chat gpt, my indicator is using neural network, and my indicator is using that, or my expert advisor is very advanced and it is based on chat gpt 5 version or something like that. But all those are marketing techniques, and when you will buy them, then those expert advisors will be exposed to you, and those will never give you any profit. If you see, I have never applied any expert advisor, I never work on any EA, I never work on any indicator. The indicator which is placed in front of me, I just do it for better look of my MT4. That's why I use it. All those methods which are available, those all methods work on price action and volume analysis and all other stuffs, and those things cannot be made with some expert advisors. Let me give you another harsh reality of these expert advisors. I have analyzed, I have tested top MQL5 expert advisors, and all those advisors have one common thing, which is that their profit take profit is just 30 pip or 40 pip, but their stop loss is 300 pips. So what will happen when you will apply those? This is the very bad risk to reward ratio. This is totally opposite. Why? Because when you will apply that, if you win 10 trades, keep in mind that if you win 10 trades and if you lose one trade, your whole profit will be zero. So what is a matter of winning those 10 trades, because if you are hitting one stop loss with very big amount? So that's why they are not recommended. I have tested with 1:2 or 1:3 thousands of expert advisors, and none of them came on expectations. And then finally I decided to go with this manual trading, or finally I decided to go with learning something, or learning some strong methods, or learning those support, resistance, and all those stuffs. Because I was being a good trader since last 7 years, and I have tested thousands of strategies, thousands of expert advisors, thousands of indicators, and I checked all those stuffs, but none of them came to be 100% true. Okay, let me give you some basic algorithm which those expert advisors use. They just simply copy the history, and then they will optimize their EA with that, and it will look very good. You will become a millionaire in backtesting, but those does not simulate real results. And most of the expert advisors are highly optimized on the history, and of course every time history is not going to repeat. Market will behave, not all the time, maybe it can behave 40% or 50% time according to history, but other 40% or 50% will wash your account. So that's why going with the manual method, going with the manual trading, and not only manual trading but going with some strong methods and doing only intraday trading or day trading is recommended, because you are not a machine, you are a human, and a human cannot simply put those trades again and again and again. So that's why I totally recommend you that don't try to go in the indicator sites or expert advisor sites, and don't ever try to buy those things, because you will buy in thousands of dollars and you will waste your $1,000, and also you will waste your account money. So instead of going to those shit things, just go to some specific or strong method which actually makes you some money, or which is 100% working and which definitely is going to work out for the long term. Okay, why I don't recommend scalping? Because if you do scalping, then your mental health will disturb. Why? Because if you consistently take trades, most stop loss you will hit, you will disturb your mental psychology, and definitely you will needed some breaks. So taking a good break and maintaining your mental health, maintaining your psychology, and only taking few trades in a week or in a month will made you some successful trader. Okay, when you will become more mature, when you will become more strong, and when you will become more professional, then your number of trades will continuously decreasing. Many new trader are who are very passionate about these trading and all those stuff, they will just jump into it, then they will blindly enter in the market, and then they will lose it. But when you are going with some strong method, when you are going some strong analysis, and if you have learned something, I will say that invest always on your education, on your learning. If you are investing on those shit or fake EAs, then those of course going to give you losses. But if you are investing on yourself, if you are investing on your education, if you are investing on your time, and if you are investing on your learning, then that thing will give you long term results, and those results are perfectly permanent. Why? Because you can continuously increase your knowledge, you can continuously increase your learning, you can continuously filter out false signals, you can continuously monitor your weakness, strengths, and you can continuously improve your strategies. But when you will buy that EA, you are totally dependent on that EA, and at one specific time that EA will blow your account, and you will just write then bad reviews or something like that. But when you have lost your money, that money is not going to come back. I am analyzing MQL5s in last 5 years, and none of any EA stays for the longer run. They will stay for 1 to 2 months, and then they will definitely disappear. Okay, and most of the people will stay crying that they have lost something or those stuffs. Let me tell you another trick of those MQL fake or scammers, that they will show you live results or live account in the forex, and they will show that they have made with that expert advisor this much money. Okay, so how they will do that? They will simply put 10 to 15 accounts, and they will put a random expert advisor in that, and any one of them will make those good profits, and they will show it that that EA is related to this account. But actually that EA does not related to that account, and I never seen any exact EA which actually matches those signals. They are all very different, and those signals will be different, and their expert advisor working will be different. So they usually manipulate those things, and they will manipulate those chat GPT and all those things to say you that these are working on advanced things, the neural networks and all those stuffs. And when you will backtest them, they will show you very good interface, and by checking those interface you will consider that it is a very advanced thing, or it is working very good. But actually they are just simple display, and those are doing nothing. These are not related to any trading thing, and they are only for you to manipulate you, and just to give you that you should buy with that or you should go with that. There is another thing which is considered as a copy trading, and those copy trading are available with MQL5, and it is also available with Binance and XNX and all those stuffs. So I will say that copy trading to professional trader is good, who is not using any expert advisor, or who are doing it manually, or who occasionally take trade even few 2 to 3 trades in one specific week, that person is recommended. But finding that person is very very difficult. What most of the people do, they will find those profiles or those people who are running some expert advisors, and maybe that expert advisor is based on the grid trading, or some expert advisor is based on some history readers, and of course at one specific time you guys will lose money because that account is going to be below. And it does not matter to the owner of that copy trading account, because they have made money by your fees. Like if you paid 20% fees or 30% fees, and they will earn that, and you guys will be in the loss. So that's why those copy trading sites are totally not recommended. Just learning by yourself, investing on yourself, and learning all those things which are necessary for trading is required. Most of the people do, they will say that just give your money, and most of the people try to catch your money, and they will say that they will make profit for you, but in actually they will not make profit for you. And eventually if anyone is asking you to money, that for the trading purpose, don't give any money to any person, because they will not give you profits, and eventually they will blow your account. Because I know these tricks, I am old in the market, and I'm doing trading since last 7 years, and I know all these tactics, I know all these trades, and my results are 100% live. I am challenging you, no one can do this on YouTube and on 100% live. If you see any YouTuber like this, or who is doing these type of things, then you can mention him, and I will definitely appreciate him. I have converted this account from 5k into more than 30 plus k in front of you. If you wanted to confirm, you guys can confirm it. And this is the pure based on my own method, by purely based on my own analysis and all those things which I usually learn. So what type of things I use? I use Elliott wave analysis, which is the most famous and very old method, and it is available within 1975, and it is working perfectly. Then I work on volume spread analysis, VSA, and that method is 100 years old method, and its accuracy up to 80%. I also work on candlestick pattern, Fibonacci retracements, Fibonacci extensions, and then RSI divergence, convergence, and hidden divergence, convergence, and all those stuffs. All those things are available, and I will say that must educate yourself. Don't give money to any person, don't give money to those expert advisors, and don't waste your money on brokers and by liquidating your accounts. If you invest little money on yourself, on your education, then that is going to benefit you for the longer term. As you know that there are multiple traders available in the market, like retail trader, and then smart money players, and then institutions, hedge funds, and all those people. So how volume spread analysis, or how VSA works? VSA you can consider as a volume behaviors in the market, and that volume cannot be fake or cannot be manipulated. Why? Because there are a lot of traps and stop hunts and all those stuff for the retail traders who have very less money, and those all uh, things were done by the whales which are available in the market. But to place a very high impact on the volumes, there should be some institutional level activity. And keep in mind that that institutional level activity cannot be manipulated, and that institutional level activity will definitely give you actual hints that whichever side market is going to move. Okay, so what is volume spread analysis and how this method works? So when market is going in the upside, then there will be different type of signs, like buying climax, which means that buying is going to be stop out, buying is going to stop, and that will be determined by some candlestick pattern verification by the volumes. And then there will be some distribution and all other stuffs. So in the upcoming market or in the upgoing market, smart money will always try to sell in the up market, and smart money will always try to buy in the down market. So how those things are happen? When market is continuously going upside, then if smart money have sell the market or institutions are selling the market, then there will be some signs of volumes available in this volume bar, and we can easily determine those. And after determining those, we can easily build some short side entries. And if I talk about distribution and accumulation, that is simply, distribution means that smart monies are distributing the orders, and now selling can start. And accumulation means that smart money is accumulating more and more money, and it is going to go up. So what is a right approach for trading? Right approach is always going with the smart money, always going with the institutions. When you will try to ride on those people, then you will definitely build profits. And all those volumes cannot be manipulated, because if institution levels are active in those things, then the high level volumes will come, and high volumes will definitely gives you actual hints that on which side market is going to move. And if I talk about leading or lagging method, then all other methods are lagging method, and all those methods cannot give you exact criteria. All those signals will appear when they've already market already moved from them. But volume is the only leading indicator or leading thing which cannot be lag and which cannot be manipulated. It will give you early signs and early indications that something is going to happen, or there is some institutional level or smart money activity is happening in the volumes or in the market. So by determining those high level activity, by the seeing those institutional level behaviors, you guys can easily predict that whichever side market is going to move. Okay, so as you know that there are multiple patterns available, like head and shoulder pattern, reverse head and shoulder patterns, then triangular patterns, symmetrical triangle, descending triangle, ascending triangles, and there is a lot of candlestick patterns available. And if you try to combine volumes with all those main patterns and all those candlestick patterns, then those patterns accuracy will also be increased. Okay, so as you see that multiple times you have traded head and shoulder pattern, or multiple times you have traded inverse head and shoulders pattern and triangular patterns, and they work only 50%, and sometimes they fail. So if there are volume confirmations, and if you can combine volumes with those patterns and then little bit price action or structure, then you can easily make very good and strong strategy which can be helpful for your whole future trading and all those stuff. So that's why learning something or learning a strong methods are very necessary. So I have given you a little bit hints about volumes and how it works. And keep in mind that at some resistance level there will be some volume confirmations, at some support levels there will be some volume confirmations, and if there is candlestick patterns, like if there is formation of bullish engulfing or bearish engulfing, then we will see some strong volume behaviors. So what will be the volume behaviors at the breakout, what will be the volume behaviors at the retracement of that breakout, all those things will be taught to you, and all those things 100% available. So there are two ways or two method. First one is, if you subscribe to our channel and if you continuously watch our streams, then I usually provide all those things day by day, and maybe it will take about 2 months or 3 months, and you can easily learn those by joining on daily basis. And we take trades on daily basis. If you wanted to follow our trades, then you guys are welcome, but keep in mind that we always make 5 to 10% in one specific month, that most professional traders or successful traders do, and we don't do any gambling thing. And if you wanted to follow our trades, then it's absolutely free. I don't charge anything. You can just simply come to our YouTube stream on daily basis, and you can simply copy all those trades, and I will challenge you that after 1 month you guys will be in a very good profitable zone. But keep in mind that I occasionally give trades, because I do not do scalping, I do intraday trading, and all those setups were based on strong methods, strong analysis, and calculating all those waves by seeing all those volume confirmations, and then I took trades. So that's why my trades are maybe in a week 3 to 5 trades, just 3 to 5 trades in one specific week, and I don't trade too much. But all those trades which I took are very high probability setups, and those setups usually work very well. But still, as I am 80% sure or 70% sure, but still I will use SL, because stop loss is very necessary for each trade. It will protect your account, and it's just a thing which cannot uh, blow your account, or which cannot wash your account. If you are consistently putting each trade SL, then you guys will definitely be successful. What most of the traders do, they will put one trade with SL, then another trade they will not put, and they will think that market will come in their direction, but those things are not going to happen. So let's talk about learning VSA method, or volume spread method. So one method I already given you, that following our trades on daily basis. Then I will give you if you wanted to see, then in my previous streams to till now, I usually give all those hints about volume spread analysis and volume behaviors and all those stuffs. If you wanted to go with that, then you guys are definitely welcome. But there will be some distortion, there will be some noise and all other stuffs, because there is someday I will come, someday I will not. So if you wanted to properly follow this method, then we have a very good course for you. You can see in the description, and it is very low, a very tiny amount, like 30 to $50, just a very low amount. And I have seen many traders who are giving this method, and with the thousands of dollars. And keep in mind that if some method is working for some specific trader, that method he will not give you. But I am implementing all those methods which I am learning, I am implementing on 100% live. I am giving you all those things which I am giving you in the course. I am implementing live on YouTube. If you wanted to confirm my trades, I have started this account from 5k, and now it is up more than 30k. And you can confirm each and everything, how I took trade and why I took trade, and all those stuffs. All those volume confirmations are provided. If you see our weekly analysis videos, then I do volume spread analysis on weekly basis, and all those analyses are perfectly fine, and its accuracy up to 80%. And this method is working since last 100 years. It's a very old method, and it's a method of institutions and smart money. So smart money method is, of course, that method is going to be work out properly. And if you continuously work on that method, that will definitely give you profits. So I have seen many traders who charge thousands of dollars for this method, because if some method is working, no one give you. If you try to find some good volume spread analysis course on the market, you will not find. Why? Because it's a little bit difficult, and if something is working, no one will give you that. But I am giving it with a very low amount. You can, it's totally your decision, that if you wanted to go with free, or if you wanted to go with just $50, and all those things will be given to you. Like this indicator is given in that course, and another indicator which is very important, and that indicator is also given in that course, but those two indicators are related to MT4 version. But this method works very well for gold, for crypto, and for any pair, whichever pair you wanted, because volume is same for all pairs, and volume is available for all type of pairs. And it is the only thing which cannot be manipulated, and it's a leading thing. What does a leading mean? Leading means that is perfectly on time or before the time. So volume will give you anything which is not happened yet. For example, if market is going upside, then in the future, if market will go down, then volume will give you indication that at that specific time or at that specific point, market will go down. So you can easily sell the market when market is going up, and you can easily buy the market when market is going down, because smart money does the same, and our institutions does the same thing. So investing on yourself is highly recommended. I think you guys have given a lot of money to brokers in form of account wash. You have given a lot of money to expert advisors and all those things. So wasting your money is totally not recommended, and investing on yourself, investing on your education is recommended. I will not tell you that just blindly go my course. I don't totally recommend it. First of all, you must know that what you are going to learn. First of all, you will see its contents, what type of things you are going to learn, and then which type of contents are available with that specific course, and then whatever its support is available or not, and then you can decide. Then again it's totally dependent on you, which if you wanted to go with free or if you wanted to go with that course. But still there are a lot of things which are not 100% available with this free version, and that is only available with that course. So that's why that course is recommended. Okay, so let me go through one another thing, which is chart patterns. So as you know that there are multiple chart patterns available, and if you blindly go with those chart patterns, of course those things are not going to work out. Chart patterns only work when you will combine it with the market structure, when you will combine it with the volume spread analysis, and all the volume behaviors. Okay, so let me give you another thing, which is very cheap, a very low thing. I am a Udemy instructor, and if you wanted to go with that, because Udemy usually gives you very good sale, or it usually sell courses on $9 or something like that. So if you wanted to go with that, you guys are welcome. I will mention 2 to 3 course in the description. So if you go into description, you will see that advanced chart pattern course with the volume and structure confirmations. So that course is very important, and ultimate day trading course is also related to those advanced things which I usually apply by taking these trades. And I don't charge anything for those courses. Why? Because it's, according to my knowledge, it's absolutely free, because $10 or $9 is nothing for any person. Okay, it's just your one time food. So there are thousands of people who charges a lot of money for their courses and all those stuffs, but I am charging very minor or very low amount for all type of knowledge or all type of experience, because I have got all this experience or knowledge with my experience, and my experience is based on 7 years. And if one person has experience, and if he is charging very little or very minor amount which is equal to zero. And why I am charging that amount? I am not charging for myself, because I am charging just for you guys. Because if you see the concept that when there is free thing available, people don't learn that, or people don't get into that. But when they will pay some very little amount, then they will think that they have paid some little amount, so they should watch that video. So that's why I am charging very little amount just for you, that you should take interest in that. If 3 to 4 persons or 3 to 4 traders become successful with my knowledge, with my experience, then that will be my success. Okay, because I have a great profession for teaching, and I am providing those education since last 2 to 3 years, and I'm a successful trader since last 7 years. And if you wanted to see the demo, or if you wanted to see the experience, then you guys can easily see my trades and my behavior streams and how I build trades and all those stuffs. So there is nothing hide, each and everything is available, each and everything is visible to you. As chart patterns accuracy is 50%, but with my method or with my analysis, I have combined volumes and market structure with those chart patterns, and its accuracy is increased up to 80%. So when you will see any chart pattern and when you will analyze the volume, you will be able to know that if that pattern is going to be workout and or not. So it's very easy, and you can easily move with that. Any beginner trader or new trader can easily go with that. So I am a Udemy instructor, and if you are familiar with the Udemy, then it's an educational or courses platform, and my course is totally available with just $9 or $10 if you go with the description link. But if you blindly go with it, then maybe its cost is high. But if you go with this description link, then that course is absolutely for $10, and it's nothing. Why I am charging just for you guys, that you should take interest in that and you should learn something. Focusing on the right thing, right method, and on right education will definitely make you successful. But if you consistently follow fake things, copy trading things, or fake expert advisors all the time, then those things will not make you good trader, and those will definitely disturb your mindset, and your interest from the trading will definitely lose. Okay, so let me give you another thing, which is cycles or Elliott wave. So if you are familiar with the market cycles, super cycles, and waves, then it's absolutely fine. So if you are not, then we have a detailed course related to market cycles, its behaviors, and it's still available with very minor cost like $9.99. and it's just a one-time food for any person. And if you wanted to join it, you can go in our description link, you guys can easily join that. It will be very beneficial for you. Why? Because that method was invented by a trader who did 75 years of trading, and based on the 75 years of analysis on the market, he invented that method. What was that method? That method was that market usually behave or work in a cyclic thing or a waves structure. Market always make some waves. So what are those waves? There are two type of waves. First one is impulsive wave, second one is corrective wave, and those waves have sub waves in it, means that one wave will contain more waves. So one impulsive wave will contain five sub waves in it, and one impulsive wave will have five sub waves in it. And then if I talk about corrective wave, then one corrective wave have three sub waves in it. So then those five sub waves will like first impulsive, then corrective, then impulsive, then corrective, then impulsive, and this is a five wave structure. So if you wanted to learn that, you guys are most welcome, and you can go with our description and you will learn that all cycles, all idiot wave analysis, and all those stuffs which are very necessary for your trading. And we have another course which is related to Fibonacci retracement, Fibonacci extensions. So if you are familiar with the Fibonacci, then that tool is totally based on mathematical equations, and market usually work with the mathematics. And I know when one trader from the US, he made billions of dollars by just hiring mathematicians and PhDs. He don't needed traders, he just did a mathematician and calculations, and he earned that. So mathematics or calculations are very necessary in the market. That is available with just 9.99 if you go with the description link. And invest on yourself, educate yourself, and when you have education, when you have a strong knowledge, and then you guys can easily be successful in trading. These all courses are these patterns or cycles or volumes pattern analysis, all these things works very well for all kind of market, for all kind of pairs. So it does not matter you are doing trades based on gold or you are doing trades in the crypto or any pair. All those methods or all those things are the same for all type of pairs. So you can easily go with that on whichever pair you usually trade. I usually trade gold because I will find it very good, because there's very less manipulation and it's very easy to go with the gold instead of those hard pairs. And you can say that I am a good investor in the crypto, and I usually take trades with the support, and I don't do futures because future is little bit, you can say, risky or something like that. And if you wanna go with without any SL or something like that, then go with the crypto support trading. But if you are doing gold trading or if you are doing future trading, then proper stop loss and proper risk to reward ratios and all those things are very necessary. And in our course, all those things determine you very well, and I already given you how you can strong your mind, how you can increase your mental ability, how you can control emotional instability. I have seen many traders that they will put stop loss, but they will, when they will see some profits, they will simply close that profit and they even can't handle the profit. So how you can control your profit, how you can stay permanently in the profitable stage, and how these things works properly, all those things are very well taught and very well clear for all type of people. So it does not matter if you are a new trader, if you are a beginner, or if you have trading since 2 to 3 months, or if you are successful trader, still you can use those things. It will be very helpful for the longer term. So investing on yourself, investing on your education is highly recommended, and getting one simple strategy and then back testing that strategy and then forward testing that strategy, testing in the demo versions. And then if you are successful in the back testing after getting all those knowledge, if you are successful in the back testing, then you can easily try in the live market. But before going into live, must do a demo trading. This is the right path, or this is the right way. Most of the traders just simply deposit some money and they will blindly go into the market. That's totally wrong approach, and that's the reason most of the traders fail. So I already mentioned in my previous minutes that you guys must have a strong strategy. So if you have not a strong strategy, I have given you all these things. You can just watch those, and then when you will learn something, when you have a strong knowledge of market, then what is the right way for analysis? First of all, you will need it to go in the monthly time frames, and then weekly time frames, and daily time frames, and then you will see that what type of market structure is available, whatever it's a bullish structure and bearish structure, and then in the 4 hour, 1 hour, what is happening. So if there is bullish market structure, a bullish behavior, then always try to go with the trend. Means that there are two different approaches. First approach is trend friendly strategies, and another approach is reversal strategies. I will recommend trend friendly strategies, and I always take entries with the trend. Why? Because going with the trend or taking trades in the trends is highly recommended, because trend is your friend. But when you will try to do reversal trading, then reversal trading is little bit difficult, and most of the time your stop loss will hit when you are trying to do a reversal trading. So those methods or those things will let you know that how you can perform a detailed analysis from higher time frame to lower time frame. And if you wanted to see a good comparison or a good thing, that how those things will work, you guys can easily go into our video section, and you can see our weekly analysis from first video to end video, that what and weekly analysis were given and how market came. So you will know that we were 100% exact as I predicted, and market exactly move according to that. So all those weekly analyses prove to be 90% accurate. So why those are accurate and how I am making this much? Only because of education, only because of those things, only because of experience and learning those things. And you guys will see the accuracy, how much that have accuracy, and I already taken these trades based on all those analyses which I have provided already. So all our courses are one course is 6 hour long, another course is 9 hour long, and then another course is 8 hours long. So going with those things and learning something which is important, and then those things will definitely give you profitability for the longer term. And if you want to be a successful, then go get some education. It is the same thing. Let me give you another example. So it is the same thing as you go into university, and then you will do a homework, and then you will do a practice, and then you will give tests, and after 4 years you will do practice, and you will do internship, and then you will get a beginner level job, and then slowly you will move towards professionalism. But what is the wrong approach in this field? Most of the traders do that. They will come, they will not learn, they will not understand anything, and then they will simply deposit something, and then they will just blindly enter into the market. It is the same thing as one person has gone 2 days or 3 days in the university, and then this he suddenly he wants a very professional job, but didn't want to learn. So he will not be able to get a job because he does not have a qualification for that. For the qualification of that job, you must needed to complete degree, you must needed to do a practice, you must needed to pass exams, and then you must needed to do internship. After completing all those process, then you can get a successful job. But when we talk about trading, people don't learn anything, people don't practice, people don't make notes, and people don't work in the demo environment, and they just simply went into live, and that's totally wrong approach. What is right approach? First of all, learn something, make a complete notes of each learning, and then after 1 month or 2 month, go into backtest, and then when you will do back testing of your learning, and then write each and every trade, why you took that trade, what was the volume confirmations, what was the candlestick confirmations, what was the market behavior, what was the market structure behavior. And when you will write it, you will get retail analysis in front of you. After that, you will have to move towards internship side, like demo trading, which is considered as an internship. So when you complete your degree, you will definitely go into internship. So demo trading is same as internship. So when you will complete internship, or when you will complete demo, then you will move into live thing. Okay, before going into market live, you don't need it to go blindly. You must have to follow a strong or some specific path. So guys, you can see our profits, how much profits we have made, and all these profits are 100% live. If you wanted to confirm, then you guys can go our first stream and you can see that from how much we have started this account, and this account is up. You can see how much profit we are making. I have started this account from 5k, and now we are up more than 30k. This is all according to our own methods, our own analysis, and this is the power of technical analysis and market behavior. I am a VSA trader, volume spread analysis trader, and I take all those trades based on VSA method. And if we talk about this VSA method, then this method is 100 years old, and this method is working since last 200 years because this works on supply and demand basis. If more volume came on one specific candles, then there is strong movement in one specific side, and if high volumes are coming in one specific move and low volumes are coming in the retracement of that move, then it means that that whole move has strength in it, and we can validate that move and we will move whatever it's upside or downside. If you wanna understand this volume spread analysis, if you wanna learn these methods, or if you wanted to learn candlestick patterns, then you must subscribe to our channel, and after subscribing must hit bell icon. After that, if you daily join our stream, then definitely we will talk all about those things which are really required and needed for your profit and for your success. If you guys are consistently facing issues in profitability, and you guys have tried many times but you did not make any profit, then this is your right time and right opportunity, because I have seen thousands of traders who tried but they do not able to build long term sustainability. So keep in mind that making profits on daily basis or weekly basis does not matter. If you are not profitable for months and even for a year, then you guys are doing nothing. You guys are just simply doing gambling. What is gambling? Gambling is simple, that if you bet on one specific side and if you lose, then your money is gone, and if you win, you got what profit one day, 2 day, third day or fourth day, but definitely one day will came, your all profits will be gone. So most of the trader try to approach that gambling thing in this trading, and that's why most of the time they failed. What is the right way, or what is the right approach? Always try to go with the strict stop losses. Okay, we provide signals on this stream on daily basis, and we try to take entry based on all technical and fundamental analysis, and you can see that how much profit we are still making. And my mission is to convert this 5k account into 100k account live in front of you. So that's why I am explaining all these things and how I will do that, and all those things will be clearly visible to you in front of you. So what was we were talking? We were talking about gambling thing. So what makes this trading session different from the gambling? Most of the gamblers just simply go when they will see some good thing, and if they win they definitely celebrate, and if they lose then they will depressed. So trading is little bit different from that. If you see our trades, then each our trade is protected by strict stop loss. So placing your stop loss is very necessary, and how you will place that stop loss, that stop loss is definitely should be there, and most of the traders don't put stop losses and they think that market is going in their own favor. So there is nothing like that. Market will never go in your favor. If you put your stop loss and if your stop loss is hit, it's absolutely fine. You don't need it to fight with the market. If you hit 2 to 3 stop loss in one specific day, then you should move to another day, and then you can move to another day. You should always consider long-term sustainability, like long-term profitability. If you lose one specific day, then it's absolutely fine. What most of the traders do, if they hit 2 or 3 stop losses, then they will try to do revenge trading. They will consistently try to enter again and again, and they think that they will recover losses. but those losses will never recover because they are doing just revenge trading, and market will keep uh, going against them, and they will definitely ignoring all those signals which market usually shows. So strict plan or the day trading plan is very necessary. What is my day trading plan? I usually took 3 to 5 trades in one specific day, and if 3 to 4 trades of them got stop loss, then I don't take any trade in that day and I move to next day. And again, next day, if I lose 2 to 3 trades, then I don't trade that day. I usually move to into next day. So, what is the right way or right approach? Always think in the longer term sustainability. Why? Because if you lose one day, if you lose another day, if you lose another day, that's absolutely fine. One day you will win, another day you will lose, one day you will win, another day you will lose. And if your risk to reward ratio is good, then you will end up with profitability. Going with specific system or going with specific method is very necessary. If your strategy is good and if you have back tested your strategy properly, then you are definitely going to be successful in the trading. Always read and always write each trade you took, and write why you took that trade, what was the signals confirmations, like if there was candlestick patterns, if there were break of structure, what was the volume confirmations, and all those stuffs. And when you will write all those stuffs, and then you will be able to analyze your weakness and strengths. So if one specific day if you win that day, then at the end of the week you will analyze that what type of things you have done in one specific day which you win, and what type of mistakes you did in one specific day which you lose. In this way you will learn that which type of mistakes you are doing and what are the weakness in you. After analyzing that, you can easily work on your weakness and you can easily improve that, and definitely in the long run you will definitely going to be a profitable trader. So if you see my trades, then I strictly work on trading plan. I strictly work on swing trading. I strictly try to take entries with the 1 hour, 4 hour, and daily time frame confirmations. So what is the right way or what is the right approach for taking any trade? First of all, you guys needed to do a complete analysis of a whole market, that what is happening and what is going in the market. If you see daily time frame, if there is a bullish structure and if there is if there is in 4 hour bullish structure is available, then you can also try to go in that structure or trend friendly trade, because most of the traders fail because they tried continuously reversal trading. Market will continuously going up and they will continuously selling it. That's totally right. That's totally wrong approach. If market is going up and if structure is bullish, then don't try to enter in any trade, don't try to enter in the selling trade. Always try to look for some strong levels, and when those levels will come, then you can take entry. And how you will take entry? You will take entry based on strict rules, based on some specific levels, and if there are candlestick pattern available at that level. For example, if one level came and if there is bearish engulfing form and then evening star form, then you can take entry with that, but with strict stop loss like above it. If it fails, you will simply exit the market, because this is the financial market. There is trillions of dollar involved in it, and no one will let you make profit. That's why to being a successful trader, you must have to work with proper risk to reward ratios, and then with strict stop losses. You must have to train your mind, you must have to do strong exercise, you must have to do strong meditation for strengthen of your minds, that you will definitely put stop loss, you will never move that stop loss. Most of the traders do that. If they put their stop loss, then they will continuously change that stop loss above and below, considering that market will move in their own direction. But those things never happens, and market suddenly hit their stop loss or suddenly moves opposite of it, and they will lose. So working with some strong methods, working with SL is very necessary. Let's talk about how much amount you should use with one specific entry and what should be the criteria. So if you are working with $100, then your one trade should be with $1 risk. What does it mean? That always risk 1% of your account if you are working with your own capital. But if you are working with the challenges or funding accounts, then you should go with 0.3 or 0.5%. And that 1% or 0.1 0.5% should be risk at some strong level, at some strong point. And if you come to your screen and if you see something, then suddenly moving into or suddenly going into trade is not recommended. You guys have to be wait patiently, and when that level will came, and if there is candlestick pattern formation like bullish engulfing, bearish engulfing, morning star, evening star at that level, or at the Fibonacci level, or if there is some bullish or bearish divergence in the RSI, then you can take entry. Without those things, don't ever try to enter in the market.